Hello viewers and welcome to another episode of the Big Leap from Mirae. And today it's a pleasure to have with us a very young, dynamic entrepreneur from the mutual fund distribution space. We would like to introduce Mr. Deepesh Mehta. Deepesh runs a very successful setup called as Grow Wealth in Bangalore. He has been in this line for the last now more than 14 years. He started Grow Wealth in 2007. He's a CFP, passionate about investor education and spreading awareness. Not only that, he's also an author. He's written a book called as Power Your Child's Financial Future, which has been published along with CNBC. He runs a very active website called as happyinvestor.in. So it's a pleasure and privilege to have Deepesh on the show. Welcome, Deepesh, and thank you for taking out time and being a part of Big Leap. So I would like you to start about how did you start your mutual fund journey and tell our viewers about it.
Sure. Thank you, Mayukh. Thank you. Welcome all. So I finished my graduation in 2006 and then I joined a company called Karvi Stockbroking Limited and I joined their personal wealth management division. So I was given the job of selling financial products to different investors. So I sold mutual funds, bonds, and different types of products. Then 1 year later, in 2007, I decided that let me start my own entrepreneur journey. And I had not even completed 22 years of my age at that time. So 2007, I decided that let me start my own, and I found my company called as Grow Wealth. So the moment I started, there was a continuous bull run that had happened. So 2007 till the beginning of 2000, it was continuous bull run, and then I just got business and I had never planned and had got so much of business in the 6-7 months of the tenure. After 2008, we all know that global financial crisis hit. Global financial crisis hit in a very bad way to all of us. Even the fund managers, distributors, investors, they're not aware, clueless of what's happening. So right from the peak of January 2008, the business fell down by about 80 to 90% by December 2000. And that nobody had planned for this. And then, though I was there in the business, I just continued because someone just advised me that you just have to stay in this business. So I stayed, I just continued, and then 2009 there was an entry load ban that had happened. So what commission that we are getting 2% as upfront, suddenly one fine day we were told that you are not supposed to get that commission forever. So that was another jolt that had happened because we are slowly recovering from what had happened during the global financial crisis. That happened, and 2009 again the revenue fell down. Okay. Again, I still did not give up. I stood strong, and then I said that okay, this is how it is. Let me continue. What worst I can see from this. Okay. So slowly the business picked up, and again in 2011, again there was European crisis during the year 11 and 12, and then the markets fell by 30%.
Yes.
And then market fell by 30%. Again, investors' wealth got eroded by 30%. Because at that time, we were only knowing that you have to sell equity funds. Beyond equity, nothing was understandable for us.
Yes.
And then 2012 something 30% market fall happened, and then 2013 came the entry of direct plans. Okay. Again, some investors were very hesitant to go through a distributor because the rosy picture was shown that if you go through a distributor, you will be making so less of wealth, and if you go through a direct plan, you'll be making higher amount of wealth. So that happened. That somehow did not impact much, but that happened. And then from there, 2014 onwards, I decided that let me just do something so that my business becomes much more stronger. I took up CFP course. So I completed my CFP between 2013 to 2014. I did my CFP course, and I was a certified financial planner by 2014 September. Then I understood different parameters. I started understanding beyond equities, and then that's how the journey started. So 2014, before my CFP, my AUM was around 1.5 crore rupees at that time. So from 14 to now, there is no stop, and today we have an AUM of about 135 crores. 7 years of journey, investment in the knowledge has helped me to scale to much higher numbers, and then we cater to more than 300 plus families and manage their distributor mutual funds.
How did you get your initial investors? Because as you said, 2007 you started, and then 2008 hit, then 2009 regulatory changes, then 2011. And anyway, in a new setup, the initial 24 to 30 months is very crucial.
Yeah.
So how did you get your initial clients and how did you pull through?
Yeah. So when you start the business, the first thing that every entrepreneur relies on that is their family members.
Okay.
But we all know that family members can only contribute to few numbers, maybe 5, 6, 10. Then I decided I had to go think something different. I just can't rely on my family members for business on a day-to-day basis. So we did something innovative. So we went and we put stalls in different apartments. So apartment were having stalls on weekends, Saturday and Sunday, and there were stalls for different products like clothing, accessories. There we had put some stalls. So this was an exercise activity, marketing activity that I had done for the entire 2000 year, and then we got decent allocations because at the back end markets were giving decent returns. People wanted to invest in mutual funds. So this activity of setting up stalls really helped, and I still have those clients whom I picked up in 2007. So that was my initial stage where I got about 10 to 15 clients as a base, and then through references I started getting clients. And then at that time, different AMCs were supporting distributors. They were giving leads. That was another way. Some AMC used to give leads, and we used to go and contact them. The closure ratio was about 6 out of 10. So every 10 leads that we used to get, we used to close around 6 leads. So that was another contributing factor to the client base, and that's how I got my first initial clients. So I would like to tell, getting the initial clients is never a difficult choice. It all depends on what kind of innovative thinking and hard work that you do in your first few years, and that forms the base for the rest of your career.
So my next question would have been on similar lines, and that when you look at a business over 10 to 15 years, as is the case with Grow Well, what do you think has worked better for you? Is it referrals, or do you think activities is something which any MFD should concentrate on? Which side, what is your view on that?
Okay. Now, one of the constant activity that I kept doing was conducting investor awareness sessions. So right from 2011 and 12, I started conducting investor awareness sessions. Whenever I saw some, a group, I told them I want to talk something on financial management. Would you give me about 30 minutes, 40 minutes of your time? So that I have till date, I have done more than 200 investor awareness sessions, and that was one of the biggest driver of creating awareness, building a brand. To give you an example, I created an investor awareness session in 2015 and 2013, sorry, and then at that time one investor came and he attended this. But in 2015, he sold a property and he came and he invested 3 crores with us. So who would have thought that that would come? So that was a live example. So investor awareness program was one of the things that I kept as a constant, referral driver for me, or not a referral driver, constant, regular prospects in the pipeline. And but once I used to get clients, then I used to ask more references from different people. And with these references, I have built my journey. So all those 300 clients that we manage today, I haven't, spent a single rupee on any other marketing activity other than investor awareness sessions and, stalls and other things. So that's how I have formed my client base.
Lovely. So I found an interesting thing which you mentioned about that before 2007, and from 2007 to 14 is one part of Grow Wealth, and then 2014 till now is another, the next phase of Grow Wealth. So what I could find out is that your CFP actually created a certain different way of how you went about doing your business. So Could you tell us about how did asset allocation change from then onwards, and what has been your views now on that? How do you manage asset allocation at Grow Wealth?
Yes, yes, yes. So before 2014, the focus was only on equity assets because everybody thought that equity was the only asset that creates wealth and you should be investing 100% of your assets in equity. So this was the illusion that I was carrying. Then in 2014, when I did my CFP, I realized that equity is just a driver to create wealth. It's the asset allocation that creates wealth for you.
Okay.
I can still recall a slide which says that 90% of your returns come from asset allocation and 10% comes from your stock selection, portfolio selection, and stock timings.
Sure.
With so to again give an example of my journey, in 2007, when I started off my journey, I started giving only equity funds. Had I given debt funds or other assets, gold or any other asset, maybe I could have managed 2008 volatility, global financial crisis much, much, much better, and investors' wealth would have been betterly managed. Because I did not follow asset allocation, I understood that that was the missing gap in my entire practice that I was doing. Then post CFP, I decided that come what may, I'm going to be a student of asset allocation for life. And then I started uh, giving assets like equity, debt, gold in the portfolio. And then in 2016, when the crash happened, that asset allocation really helped, and investors did not flock out away from us. And that has been a long-term sustained relationship that I have with my clients. That come any volatility, you have an asset allocation in place, and that asset allocation will take care of your entire portfolio journey. That was one. And the second important thing was people used to read newspapers and take decisions. I tell people that instead of reading newspapers, I think you need to read books written by gurus like Howard Marks and many other people who write books. And they are the people who have really created wealth. Billions of dollars have been created. And if one can understand from that rather than reading a newspaper, then your investment journey would be much, much, much better. So I decided that I should read books rather than reading newspapers. I need to read books and implement what has been written in those books. And through that, we follow asset allocation. So currently, in at Grow Wealth, we have an in-house asset allocation model built. And through this, at any point in time, today, if the investor comes with a check of 10 lakh rupees, for example, so we know where we need to put that money. Should it be in equity? Should it be in debt? So we have an in-house model that we have created, and that asset allocation model is running well, and that has really worked well when March 2020 crisis happened.
So my next question would have been, how was your experience with investors in 2020, and how do you look at the business now post COVID in 2021?
Okay. So since 2014, for every check that I collected, I asked the investors, what is the time horizon? When do you need this money back?
Okay.
So investor would tell that I need this, if I'm giving 100 rupees, I need 20 rupees in next 2 years, about 30 rupees in the next 5 years, and another 50 rupees after 7 years. Based on his timeline of requirement of funds, we used to allocate the assets. If it's less than 2 3 years, we used to purely give him debt funds. If it's between 3 to 5 years, we used to give him hybrid funds or asset allocation funds. And if it's 5 6 years and above, we used to put that money into equities. So this is the model that we are following. And then when 2020 crisis hit, Corona crisis hit, and the stock markets globally fell, we were surprised. We were very worried that what would investors do, and we were surprised to see that no investors was worried because they were already told in the beginning that this money is for your long term, so you don't have to worry how the interim journey would be. So in 2020, we did not have a single investor who had to remove money to take care of his requirement for that financial year.
Okay.
So this is how the model that we follow in-house, saying that we have a timeline in place, and when we allocate the funds according to those timeline requirement of those funds. So some clients lost job, but they had debt funds in their portfolio which could cushion them for some time before they could come back to profit. So that's how this has been managed. And again, I would give the credit back to asset allocation. It's asset allocation that has brought investors a good experience in by investing in mutual funds.
So I would like to call upon my colleague Shyam. Shyam is from our Bangalore office and has been engaged with Deepesh for now almost a decade now. So Shyam, if you could share your experiences when you look at how Grow Wealth and how Deepesh has been managing his business for the last so many years.
Yeah, I think I come across Deepesh as a very young, energetic, and positive-minded person. I have been associated with him from 2012 onwards, and I still remember when we did the first IAP program with Deepesh after me coming to Bangalore. And it was also the first IAP for Deepesh also, and I could see his enthusiasm in conducting that. And what good thing I noticed that he has a good support from his family and friends, because they all were involved in his job, which I am sure would have given him a lot of support and strength in during this phase. The other thing which I am very happy about him is that he has written a wonderful book called How to Power Your Child's Financial Future. I feel that is a very important book which contains a lot of good information to parents to shape their child's future, which is a very important phase in the journey. So, which he has rightly, tried to address to them. And he is a very down-to-earth person and very approachable. So, I've seen his progress from 2012 to now, and I wish him really good successes going forward also. So, all the best, Deepesh.
Thank you, Shyam. So, Deepesh, my final question to you is: many of our viewers are MFDs. What would be your advice to them when they start this journey and when they look at this as a profession?
Sure. So I would tell that two to three things contribute to MFD success.
Sure.
Now, one is the accountability towards your work that you're doing. So you could have, for example, you could have 100% of all the knowledge that you could have, but if you're not accountable to clients, then your business cannot sustain for long term.
Sure.
So the first one is accountability. The second one is proper knowledge. So we don't go to a doctor who is not knowledgeable. The same way, clients would not come to an MFD unless that MFD doesn't have any knowledge. Okay. So the mutual fund distributor need to have a complete knowledge on what kind of advice that he's delivering to his clients.
Sure.
Accountability, knowledge, and the third one is trust. A combination of accountability, knowledge, and trust, leads to financial intermediaries' success journey. And this is what I realized in 2014-15, that I need to have a combination of this thing. Just only with accountability and with no knowledge, it will not work. Only with knowledge and accountability will not work. And without trust, you can't do anything. So you need to have a combination of these three. And when you mix that together, clients see this as you as a more serious person in this profession, and the business would just come.
That's a large takeaway for me also, that you look at all the three things, A, K, and T. If none of them, any two of them wouldn't work, not one of them will work. All three in a combination work. My another learning is for all MFDs would be, to summarize, is people come for the activities, but they stay for the asset allocation. So that's a lovely part for you. Thank you so much for doing this with us. Thank you for being a part of Big Leap. We wish you and Grow Wealth all the more success in the future, and we would like to be a partner of that journey. And thank you viewers for being a part of Big Leap, and we would bring more such stories again in the future. Till then, take care. Bye-bye.
Thank you.
Fund investments are subject to market risks. Read all scheme-related documents carefully.